Hi guys, welcome to the first installation of the public mentorship and of the first lesson where we'll be talking about market structure, and this is video 1 of 3 as you can see on the screen. So before we get to market movements or just visualizing market structure, I really want us to understand two to three things regarding how the market moves. So the market could either expand, aka impulse, or it can either correct, right? And when you want to really understand the word impulse, I'd suggest you look at Elliott wave theory, and not to be a master at it. Just understand what people who use Elliott's mean when they say this move is impulsive or it's corrective. Trust me, it's going to serve you. As well as the corrective nature of the market. So when you look at corrections, Elliott wave has really, Elliott wave really does a good job with explaining the logic surrounding market structure. But because the logic to a degree is centered around drawing points and not understanding what the points are, that's what the biggest problem is. And you go to Wyckoff, you'll see things like, because it's also good for understanding corrective moves. You also see labelings like preliminary support, automatic rally, UTAD, UT, and all that. But just reading that without understanding the logic of how the market moves, it's not going to serve you. Trust me, right? So that's one thing I wanted us to start with, and just give you guys something to think about. So generally, when you talk about market structure, right, or just any topic surrounding trading and investing, everything should be logic based. Not because price touches this trend line or support line 2 or 3 times. Therefore, when price gets there, I start buying. There's no logic behind that. You're simply, in fact, to say the least, you're not following the money, right? So let's get into the crux of the lesson. So let's start with basics. So generally, when a market is continuing to create lower lows, it's in a bearish trend. And when it's continuing to, or when it's printing higher highs continuously, it's regarded as a bullish trend, right? So here I have so this is the first labeling of the bearish trend. This is the bullish trend, and this is an extension of a bullish trend. You understand what I mean in a few minutes when I say the third one is an extension, right? So the logic is that the reason why price moves lower, for instance, say this high started, say somewhere around here, right? People would draw a trend line like this. And by the way, I have nothing against trend lines, right? They just, let me rather use, this is much better. I hope it's visible. So as I was saying, I have nothing against trend lines. My issue with trend lines is the logic, right? So the logic would be, okay, we've had a first touch here. This is the second touch. Then the confirmation of the trend would be on this third touch, right? So when price gets to here, most people are selling. Let me say most retail traders are selling, right? And of course, others will use advanced methods like using confluences of using multiple time frames before entering the cell, and that's okay, right? These things work. Let me start by saying this. They only work if you understand the logic, right? If you're using multiple forms of analysis, you'll get it right, based on that analysis. But it doesn't explain what is really going on, particularly from the people who are controlling the market, which we call the composite man, or institutional traders, market makers, whatever you want to call them, right? They are the ones that are moving the market. I don't care who says what, right? Anyone, the people who are running the show, in the context of markets, are people who have stacks of billions. Not us retail traders using lot sizes like your 0.01s to your one lot. That doesn't do anything in the market, right? These institutions are opening billions and billions of orders at certain price levels. And our job is to understand where they're placing their orders, why they're placing their orders, so we can follow the money, right? Numbers don't lie, guys. They really don't, right? But anyway, let me stop blabbing and continue with the lesson. So we're talking about the issue of trend lines, right? So to make things really simple, the reason price is moving to the floor in this very sense is because institutions are driving price lower. So for instance, right here, right? Or let me just do this right here. There'd be something we call an order block, but it doesn't matter. You don't need to concern yourself about that right now. For now, all you need to understand is that when the market is going, the reason why the market is creating highs and lows, it's rebalancing, right? What do I mean by rebalancing? If one market continued going to the floor, let's say Euro USD was selling for straight 10 years. There was no retracement or any form of structure validating retracements, right? The economies would crash dismally, to say the least. So institutions always have to rebalance how they distribute their orders or accumulate them, right? So they distribute them when they have to go bearish, and they accumulate them when they go bullish, right? But now, to further make this concept stick, the reason the market is moving, it's seeking and destroying. That's the simplest way I can explain it. And what is it seeking? Liquidity. What is it destroying? Liquidity. So if you can wrap your head around the concept of liquidity, you're going to hit the ground running. If you can grasp that concept fully, you're going to hit the ground running. And just center everything, every style of trading you do around liquidity, be it trend lines, Elliott, whatever. It doesn't necessarily have to be smart money, right? It doesn't necessarily have to be that. But just understand the basics and fundamentals and logic of liquidity. We hit the ground running. So now, let's get back to the issue of trend lines, right? So in this bullish sense, of course, it would be like this, right? Then trend line traders would be waiting for a third touch here to enter long, right? Okay, cool. So then there's a set of an extension. What do I mean when I say an extension? When you can connect two highs to the third one easily, because now you can see this high is here. So your trend line would be in this light. Let me just use this for Come on. So your trend line would be like this. And guys, forgive me for the presentation. This is my first lesson. I'll get better as times go, right? For now, just focus on what I'm saying and look at the things that I'm plotting. It might be messy, but trust me, the devil is in the detail. So when you draw this trend line, this is what you'd have. And now you have problems. The first thing is this. You've missed out on this one, which before this third one occurred, you used it as a higher high. But now, since prices moved so high, you can't even connect the recent higher high to the other one, to the third one rather. So what Elliott traders would do, they'd have a middle trend line. This is not working out. Yep. They'd have a middle trend line, right? Mid trend line, whatever you want to call it. And unfortunately, the price would come here at times. It would come here at times and then continue going higher. But the reason price is going high is not because of this trend line. Literally, it's not. The things we were talking about a few minutes ago regarding rebalancing, regarding seeking and destroying. And there's actually information in this extension where price turned and continued going higher, right? But we'll get to expand on these topics in other segments, right? For now, let's just focus on building the fundamentals and the building blocks that are going to help you in your trading. So always when you look at structure, first thing is first, why? Why is it happening? Once you understand the logic, then your life will really, let me not even say your life, right? Or your life regarding trading or looking at charts is really going to improve, right? Forgive that disturbance. So now, let's get into institutional logic, right? So there's concepts, there's people who are using concepts like true resistance or true support, right? What they are merely saying is that, or supply and demand, what they're merely saying is that if price is continuing going down, for instance, so from here, right, price comes through this way and it goes down, retraces, continues going down. So if price continues going down, right, in a very sense, institutions are not going to move higher than this. So if the price is still going to the floor, when institutions retrace, they are not going to move above this. Because if they move above this, because they are the ones that have created this lower high, if they move above this, their positions are going to result in a loss, which is unnecessary, and there's no point for them doing that, right? So price is going to retrace to this lower high to mitigate, then continue to the floor, right? So once you understand how to identify true structure, you'll understand where institutions have their orders. That'll help you a great deal. Secondly, I want you to understand this very basic but really advanced idea. Price knows no time. So we have the 1 hour time frame, 4 hour time frame, any time frame you can imagine is available depending on the trading platform you're using, right? So we've just made things more logical with how we understand existence as a society of human beings. So anything that has to do with how we understand things has to have a time element, since it's in the logic and dimension we do things in, right? So even in charts, it's the same thing. So when I say price knows no time, this is what I mean. So let's say this is the daily, right? So on this bearish tone, excuse me. So on this bearish tone, on the 4 hour, this is what you have, right? There's a fractal nature of market structure on a lower time frame, right? So the same thing you see on the daily is the same thing you're going to see on the 4 hour. Of course, the market structure won't be the same, but the idea of structure will be visible even on the 4 hour. So if you go down to the 1 hour, where you see the 4 hour structure, there's going to be a minor structure within that 4 hour minor structure, right? This is where things start getting a bit juicy and confusing, especially as a beginner, right? So what I need you to understand in this sense is that price is fractal. That's the first thing. Secondly, price has no time. So price does the same thing on every time frame, day in, day out. Day in, day out. There'll just be variations of the theme of market structure, right? So let me reiterate the concept of true support or true resistance or supply and demand, right? If price is going to move in a bearish sense or in a bullish sense, there are going to be areas where institutions are not going to move below or above those levels, because if they do that, their positions are going to be at a negative. And as I said, it doesn't make sense for them to do that. So once you can truly identify true higher highs and true structure points, let me make it simpler. True structure points, then you're going to have a bit of an idea of where you have to place your orders, how you have to move, or just find a place to trade around in the overall market structure, right? So another thing is that, so the black is the daily, then the 4 hour, what am I doing? Eraser. And the 4 hour has this, right? This color. The 1 hour will have this color. Right, let's just do this. Right, you get the idea. So within the 4 hour structure, there will be a minor structure, and it's minor only in the context of the 4 hour, right? Not of the daily. But let's not make things technical unnecessarily. So when price breaks structure, it starts breaking it on the lower time frame. So for instance, let me raise this section. Okay, let's just take this part out. Right? So on the 1 hour, This is what we have, right? And here, it's a 4 hour, it's a 4 hour higher low, right? Remember, on the 4 hour, this is the trend. It's bullish, right? On the 1 hour, we have a bearish tone and a bullish tone. So when the 1 hour breaks, let me just do this. So when the 1 hour breaks the recent low that created the higher high, it's a change of structure only on the 1 hour. It doesn't necessarily change the overall trend of the 4 hour time frame, right? So what it's merely suggesting is that momentum on the 1 hour is present at this moment. So price will move in accordance with that momentum, but always check your higher time frames, right? So on the 1 hour, structure is being broken, but on the 4 hour, structure is still being maintained. So a break of structure on the 4 hour is only a corrective move on the 4 hour. A break of structure on the 4 hour is only a corrective move on the daily. So build that logic when you're looking for trades. It's going to help you out a lot, right? So lastly, I think this should have been more of a podcast, honestly, but it's all good. So now, lastly, I want us to talk about the validation of structure. And lastly, I want us to talk about different time frames in the context of structure. But I've already alluded to most of the concepts regarding time frames, but this will put more of a nail to the coffin, right? So say black. So for this lower high to be valid, it has to create a lower low and break below this previous one. If this lower high doesn't break this lower low, I have no reason in believing this is a lower high because it didn't break structure, right? I hope this is making sense. And there's two forms of breaks of structure. It could either be with a wick, or it could either be with a body, right? But we'll touch more on that with the second video. I just want you guys to think about that. And oh, guys, by the way, this is not for beginners in no way. This is why I'm running this quickly, right? If you are a beginner, go to Baby Pips, study the basics. I'd say cover at least 3 to 4 topics, right? There's a lot of subsections within those topics. Just cover 4 topics, or let me just say four modules. Cover that 4, and once you've covered that 4, you can join us as we move, right? So lastly, the composite man or institutions have a different function or different purpose. There are institutions who are more swing traders, others are position traders, others are day traders, others are scalpers, others are hyper scalpers, right? So in each and every time frame, there's a true high and a true low. There's a true high and a true low, right? The same way you can find a true high and a true low on the daily is the same way you can find a true high and a true low on a 1 minute, 2 minutes, 10 minutes, 15 minutes time frame, because institutions have different functions. They are not all swing traders. So the same movement that the institution that's using the daily for swinging, because they use the same logic. Even if you go to the 1 minute time frame, you will still get the same fundamental ideas. So yeah, guys, that's a wrap. See you in the next installment, which will be next week Sunday.